Hello, assalamu alaikum friends. So this is my first video for the financial management students, and this is practice test 1. Okay, because the reason I haven't taken any past paper is because we don't have section A and section B for the past paper. We are only given in the CBE platform, we are only given section C. So that's why in your CBE platform, when you log into your CBE practice login, you will see that you have been given two practice tests, test 1 and test 2. I'm going to cover both the practice test. Okay, as you know that this is the last week for both AFM and financial management. So it's very important that by now you are very comfortable in CBE platform. You know how to use a calculator, how to highlight, how to use a rough note, how can you make a rough note, how to insert symbol, how to use formula, which table to use. Okay, all these things by now you have to know. Okay, definitely if you have seen my AFM videos, they are in much depth. Okay, so compared to that, financial management definitely will be much easier. Okay, and also what you have to take care is your time management. A lot of students fail both AFM and FM, not because it's difficult or something, because of lack of time management. Why? A lot of calculations are required, whether it's AFM, whether it's FM. So due to a lot of calculations, time management, we don't think about time because we are in the calculation, we have to solve it, we have to get it right answer, we try to perfect our answers. So don't make that mistake of perfecting your answers, and you should know how much time you have to allocate to each section, right? Your financial management, as you know, right? Or if you don't know by now, you should know. Okay, I'm giving a brief introduction before I actually start the paper. It is divided into three sections: section A, B, and C. Section A and B, you just have to, it's like objective test questions. Okay, it's like multiple choice questions where you have to type one answer, or you have to select from the drop down list, or you have to click on some boxes, right? Or you might be given four options, you might have to select one or two. Such kind of questions will be asked in section A and B. That means we don't have to write anything. I mean, we don't need to type. Okay, no word is needed, no Excel is needed. But in section C, you need MS. You either have to type, or you either have to use Excel. You will be given in which format the answer has to be. If if it is to be given in Excel, already Excel will be given to you. You just have to use the Excel, right? Compared to AFM, you have an option. There you have a choice. That's why their students struggle a bit, which one to do, whether in spreadsheet or Word. But for financial management, the good thing is you don't have that option. You are forced to do it in Excel or Word. So you know what you actually have to do. Okay. So that's a good thing. Okay. And how I'm going to start with financial management is on the CB platform. The questions which I'm going to do is I'm going to divide each sections differently, and then I'm going to make a video. Section A, okay, will be different. Section B questions will be a second video, okay, or you can say part 2 of this video, and section C questions will be dealt in a different video. So in this video I'm only going to cover section A. 15 questions are there in section A, worth 2 marks each. That means 30 marks is covered in section A. So this video I'm only going to cover section A. The reason why I'm covering section A, because you have to, even though it's easy, right, it is not easy for all the students, trust me. Section A and B, when you know that one answer is correct, you have more chance of making mistakes there, rather than section C where it's an open-ended question. You can have variety of answers. Okay, you have to know how to pick. Sometimes all the four options might look the correct answer. Some it's easy to identify, okay, this is the wrong one, but some it's not easy, and some you have to do calculation. Rough note you have to make somewhere, like in this question number 1. Okay, you have to know how to use a calculator, how to use the scratch pad, and all those things. Even though in the answer it's not required, but the workings you have to do, otherwise how will you come to an answer, especially where calculations are required. Okay, so for that, and also your time management. Okay, so what I will do is the practice test 1. for the financial management, I'm going to break down and I'm going to explain in between, and I'm going to do, since this you can take this is kind of like a revision. Okay, so this is like a revision for all the students who didn't go through the syllabus. So you can quickly go through the syllabus by doing this, attempting or seeing this video and doing these questions by yourself. That's a very good way of learning at this stage, not from the textbook or the revision kit. Going through the past paper or doing this practice test and all, and seeing yourself, marking yourself along with the answers, how much you're getting. Okay, checking yourself along the marking scheme, which we'll be doing at the end after we finish the section A. Okay, practice test 2, I'm going to do it in time management. Okay, the paper is 3 or 15 minutes, or I guess it's a 3 hour. Okay, whatever it is, I'm going to do it in the time. Okay, time myself and do it. There I'm not going to explain you anything. I will just do it like how a financial management student would do. Okay, to show you how to take care of your time management. That means I'm going to do that paper in 3 hours, so that video is going to be a long one. This video I will explain you the concept, and then I will do an answer. Click the right answer. Okay, for the practice test 1, all the sections. But when I come to practice test 2, I will do it like a full exam paper. So you will just be seeing on the screen what I'm doing. That's it. And also you will be seeing how I'm using the time to do it. Okay, so starting with the practice test 1, this is the very first video of any revision for the financial management, right, students? AFM, there are plenty, I've done plenty of questions in AFM. Okay, so let's start, and best of luck to all of you, and hope that at the end of this video you will benefit from all those videos which I'll be uploading, and make the best use of it, especially for those students who didn't have the time to go through the textbook, who didn't have time to go through the revision kit questions. Please make the best use of these videos, because this is just I am not getting any benefit out of this. Okay, the benefit ultimately is going to you. You are the one who has to benefit from this, the students who's watching it. And don't forget to share this video also among your friends who must be struggling right now, breaking their head, okay, stressing. Okay, so let's start. Okay, and always, especially for section A and B, read all the 4 options. Okay, don't decide the section A is the correct service like that. No, and try to finish section A and B as quickly as possible. That is the greatest advice I could give to any financial management students. Try to finish your section A and B as early as possible, because section A and B are you can finish it early. But section C, you will take a lot of time over there. You have to write, you have to plan your answer, you have to think. Long paragraphs are there, you have to read the case study. It will require a lot of time. But section A and B, if you have practiced a lot of questions, I think one question should not take more than 1 or 2 minutes. Okay. Okay, so starting, the owners of a private company wish to dispose of their entire investment in the company. The company has issued a share capital of 1 million of 0.5 nominal value ordinary shares. Okay. And the owners have made the following valuation of the company assets and liabilities. Non-current 30, current assets 18, non-current liabilities 12, current liabilities 10. You should be very fast to read and understand, okay? So the net realizable value of non-current exceeds their book value by 4 million. And the current asset include 2 million of account receivable which are thought to be irrecoverable. What is the minimum price? See the first one, okay? Here you don't have an option, the 4 options. Here you have to input one answer. What is the minimum price per share that the owners should accept for the company? Immediately what should come in your mind, okay, whenever, especially in section A and B, whenever such question asks, you should know from which which topic this question is coming from. Then it will be very easy for you to go back and use those concepts what you have learned. Otherwise, if you are still thinking at this stage, where is this question, where did this question come from, where did I learn this, that means you are in a big problem, my friends. You are in a big problem. Immediately should strike in your mind that this is business valuation. Okay, what is the minimum price per share that the owner should accept for the company? Look at the thing in the bracket, to the nearest whole dollar. So your answer has to be to the nearest whole dollar. If you put it in decimal, even if you're right, you will not be awarded marks, because either you will get the 2 marks, either it is 0. There is no in between marks. To the nearest whole means to the nearest whole. Okay, so here if you see, you need a calculator. Okay, open your calculator up like this, it will come. You can use your own calculator also. So what do you have to do? Add your current and non-current, that is 30 plus 18. Okay, and minus your current and non-current liabilities and current liabilities. Okay, and what else? First you have to deal with this. Okay, in this box whatever it is there, just write it. Add both your current and non-current assets minus current and non-current liabilities. Okay, next, the net realizable value of non-current asset exceeds their book value for 4 million. That means you have to add this 4. You have to add this 4. Addition and subtraction does not matter in which order you are following. Okay, so here bot first does not apply. You can, okay, a good piece of advice, if you are struggling which one, always take from the table first. Whatever is there later on, you can add or deduct it. Okay, so I have used all from the table. Then the realizable value, since it exists the book value, I will add. And since I cannot see the whole thing because of the calculator, I will take it this side. The current assets include 2 million of accounts receivable in the current assets. Okay, I have already taken it in this 18 includes it. So this 2 is included in this current assets, but they are saying it is thought to be irrecoverable. That means what? I have to minus the 2. I have to take out the 2 and enter. It is 28. Okay, it is 28. Then this 28, look at it. The company has an issued share capital of 1 million 0.5. You can even highlight also in the beginning. Has issued share capital of 1 million of 0.5. So this 28 needs to be divided by 2. Okay, so 28 divided by 2 equal to 14. Equal to 14. So what is the minimum price per share that owner should accept? 14. Okay. Because the company, they should not accept less than the net realizable value. So it is 14. Next, I'm going to go to the next. This is a different type of question. Okay, here you have to click. So by clicking on the relevant boxes, which of the whether each of the following financial instruments are traded on a money market. So for all this, you have to read the textbook. Okay, financial instruments. What is this money market? What is financial instruments? Okay, what are this all these things? It is there in the textbook. Okay, here you don't have to think. You just have to know whether it's money or not. That's it. You have to know. Okay. So commercial paper, is it traded on money market or not? It is traded on money market. Okay. Convertible loan notes. Is it traded on money market or not? It is not. For that you should know what is money market. Okay. Next. Treasury bill. Yes, money market. Certificate of deposit. Money market. Okay. So some, if you see some questions take less time, some takes more. Like if you go to this one, it takes more time compared to the second one. Why? Because you have to do some calculations there. Here you just have to click. Now let's go to the third one. Okay, So Andrew is a large listed company financed by both equity and debt. Which of the following areas of the financial management will be the impact of working capital management be smallest? In which of the following areas of financial management, or so in which of the following areas of financial management will the impact of working capital management be smallest? First of all, you have to understand all of these four areas are areas of financial management only. But out of these four areas, only one area where the working capital management will be smallest. Is it liquidity management? Is it interest rate management, management of relationship with the bank, or dividend policy? What is it? It is dividend policy. Some okay questions like this might be a little difficult. In that case, what you have to do is first eliminate the wrong answers. Okay, liquidity management, definitely working capital and liquidity hand in hand. Interest rate management, no, it will work with work. Interest rate, liquidity, okay, working capital, they're the same thing. Management of relationship with the bank, definitely it will have an impact, it will have a big impact, because working capital management works with your current assets also. So current assets means your interest and all, so interest management, and also you have to deal with the bank because of your current asset liabilities and all those things. If you are taking a loan, let's say from bank, short term loan, so you have to deal with the bank. So management of relationship with the bank also, it will have an impact. But dividend policy has nothing to do with working capital management, because dividend policy is another policy, okay, another area. So dividend policy, which two? Now here you have to select two, not just one. So don't select three or don't select one, select two. If you select only one, mind you, even if that one, the one which you selected is correct, you will not get the full marks. You have to select two. That's why it is in bold. Okay, which two of the following are descriptions of basis risk? So this shows description or definition means you have to learn all the definitions from the textbook of any term you see. Okay, it is the difference between spot and currency, spot exchange rate and currency future exchange rate. Okay, we'll keep it. It is the possibility that the movements in the currency future price and spot. First, always read all the four options and then click your answers. Okay, it is possible that movement in currency future price and spot rates will be different. It is the difference between fixed and floating interest rate. It is one of the reasons for an imperfect currency future hedge. Okay, here two things can happen: either eliminate the two wrong answers, or either you know the two correct answers. Like we usually know the two correct answers. Okay, there is no inky pinky ponky or no guessing work here. Okay, either you eliminate or either you know the two answers correctly. So two of this can happen. Okay, so first one is out. Okay, it is the second one, because we know future price and spot moves differently, and it has nothing to do with floating and fixed interest rate, so it's definitely out, and it is one of the reason for imperfect currency future hedge. Yes. So going to the next one. Okay, here wherever the calculations are required, you can use the scratch pad and your calculator. Okay, or you can, when you are using your own calculator, then in the scratch pad you just enter. But usually calculation things take a longer time. Okay, so you need to be very quick in your calculation. That means when you're practicing also, the calculation part, practice more on calculation part. Okay, so here Craig has sales of 200 per year and a gross profit margin is 40%. Finished goods inventory days vary through the year within the following date. Maximum minimum. All purchase and sales are made on cash basis. No inventory of raw materials or work in progress is carried. Intends to finance permanent current assets with equity and fluctuating current assets with this overdraft. In relation to finished goods inventory, assuming 360-day year, okay, how much finance will be needed from the overdraft? Okay, this type of question requires little bit of thinking. Okay, if you don't understand something, read again. Okay, So in relation to finished goods inventory, okay, here is nothing, no work in progress, no raw materials. Here they have told us. So you don't have to worry. Everything is finishing goods only. So finished goods inventory and assuming 360-day year. Usually in a that inventory thing, inventory turnover and all, what do we use? We use 365. But since they have given us 360-day year end, so we are using 360 only, okay? And how much finance will be needed from the overdraft? How much finance will be needed from the overdraft? First you have to understand that. Here you need a calculation, okay? Take out your calculator, okay? So it will be 200 because this is the sales. 200 multiplied by what is the overdraft? Overdraft means when you have to finance it. Look at the maximum and the minimum. This will tell you the overdraft. Minimum is 90, maximum is 120 days. So 30 days. You need finance for 30 days. 30. Okay. You can even, it's better to put a bracket. Okay, so you just clear. Okay. Don't clear, you can delete. Okay, it will just delete that digit. If you clear, everything will be cleared off. So 200 multiply by bracket into 30 divide by what is it? 360 day. They have told you. So 360 day, 360 day. Okay, now if you use 365, you will be wrong because clearly they told 360 day. Okay, close bracket into gross profit margin is 40%. Okay, so what will be the cost? Cost will be 60%, right? Operating cost. So it's 10. Okay, next. In relation to the irredeemable security paying a fixed rate of interest, which of the following statement is correct? So the word says is correct means only one can be correct. So if you see in all the cases as risk rises, if you see all these things, this is how you read fast, okay? You're not reading again the same thing as risk rises, you know everything as risk rises, okay? So you quickly can know that everything is same. All the wordings is same except this fall, rise, only these things are changed. Okay, so as the risk rises, market value of the security will fall to ensure that investor receive an increased yield. Okay, this looks correct. Okay, as risk rise, market value of security will fall. Up to this much is correct, but investors receive a reduced yield. No, because risk rise means even your yield have to increase. Okay, even but security will fall. Risk rise, market value of security will rise. This will. So market value of security will not rise if risk rises. If risk rise, market value of security will not rise. So definitely it's the first one. Sometimes, especially, I want to take you back. Wait, I'm sorry, not navigator, just go to the previous one. This type of question is easy to identify the correct answer in the first instance. The reason why, because you know that this combination will not be there anymore. Okay, risk rise, market security will fall, interest will rise. Okay, only it is only in this one only. So that means definitely other three are wrong if the first one is correct. Okay, but it only comes for this type of questions. Okay, where it's about rise, reduce, and all, and where one statement is correct. For that one, it's easy because this combination will not be repeated. Something or the other will change, which will make the statement incorrect. So POP is switching from using mainly long-term fixed rate finance to fund its working capital to using mainly short-term variable rate finance. Changing. Which of the following statements about changing POP's working capital financing policy is true? Okay. From long-term, they are changing to short-term, and it's also is variable. Finance cost will increase. Refinancing risk will increase. Interest rate will decrease. Overcapitalization risk will decrease. It is true, they are saying. It is refinancing risk will increase. Okay, see, interest rate will eliminate the wrong ones and see. Okay, interest rate risk will not decrease. How can you say it will increase? Or it could either decrease or increase. You cannot know from fixed to variable if you change. Here, this we don't know. Okay, overcapitalization risk will decrease. You don't know it will decrease or not. Right? It's not true. Finance cost will increase. You cannot say whether finance cost will increase or not. Sometimes it might decrease also, but refinancing risk will definitely increase. Why is that? Because when you're changing from long term, it is fixed rate, but from fixed to variable, when you're going variable are more risky, right? Because variable you don't know when it will increase, when it's decrease. At least in fixed term, you can predict it's fixed. Whatever happens to the interest rate. That's why refinancing risk will increase. In your relation to just-in-time inventory, which of the following statement is correct? Inventory level includes a significant buffer. Deliveries are likely to be infrequent. There is a low risk of stock outs. High holding costs are likely to be low. This is something which is very easy and you should be able to quickly answer. It is holding costs are likely to be low. Okay, because definitely others are not correct. You will have a high risk of stock out because you don't have the stocks in house. Deliveries are likely to be infrequent. No, you will have very frequent deliveries. Inventory levels include a significant buffer. No, it does not include a significant buffer. All the others are incorrect. Okay. A company has annual after-tax operating cash flows of 2 million per year, which is expected to continue in perpetuity. And the company has a cost of equity and before a tax cost of debt and after tax cost of capital is 8%, corporation tax is what is the theoretical value of the company? Make sure that you know how to find the theoretical value of the company. Okay. What is the theoretical value? It will be 2 million divided by after tax cost of capital. Remember that. The after tax cash flows, okay? After tax, you are anyway taking after tax, weighted average cost of capital you are taking. Not cost of equity or even for the debt you have been given before cost of debt. So after tax cost of capital is 8% per year. So you take it, divide by after tax weighted average cost of capital 0.08. Because they told that this 2 million will expected to continue in perpetuity. So this word, because of this word, you are dividing it by cost of capital. So it is 25 million. Next, which of the following would you expect? Here it's a drop down list and you have to select which of the following would you expect to be the responsibility of the financial management. Producing annual accounts, no. Producing monthly management accounts, no. Advising investment, non consider devising period for staff. Definitely is this one. So some things are is very easy, okay. Now keep your calculator ready whenever you see a calculation, okay. You cannot resize the calculator, so I'll keep it here. They have an issue 3% convertible loan notes which are redeemable in 5 years time at their nominal value of 100 per loan note. Alternatively, each loan note can be converted in 5 years time to 25 ordinary shares. It's a convertible loan note, okay. Current share price is 3.6 and the future share price growth is expected to be 5%. Before tax cost of debt of this loan is 10% and corporation tax 30%. What is the current market value of the convertible loan note? You have to know how to value the loan in the loan valuation. Redeemable debt loan note, okay. This is or convertible loan note, how to value it. This is your topic from your, okay. This requires a lot of working, okay. So here what are you going to do? First, use the dividend valuation model, okay. Current share price, what is the current share price? 3.6. Do step by step if you cannot do it in one go in the calculator, okay. So 3.6 into what is it? If you see the growth rate is 1.5%, okay. And for how many years? how many years? Per year. Okay, so it is for, it will be convertible to shares in 5 years time, so it will be 1.05 to the power 5. Okay, when you have to write to the power 5, this is the sign. Okay, I hope you can see that, to the 5 for 5 years. Now when you multiply, you need to press this. Okay, don't multiply. What happens when you don't forget to press this and you just multiply by 25, the powers will be multiplied. So don't do that, just delete. After you press 5, press this button, the right arrow, then it will bring it down. Now you multiply by how many? 25, because ordinary, it will be converted into 25 ordinary shares. This is the formula, by the way. You don't have to write the formula anywhere, but you have to know the formula. This is the reason why you have to memorize the formula and keep. For this reason. Otherwise it will be very hard to work out. There is no guessing. Okay, here. This is it. Now you need to discount this at what rate? 10%. They have given you before tax cost of debt. Okay. So you will be discounting this at what? At 10%. What is the discount at 10%? Okay, for 5 years. Now, either you can do it manually if you know the formula. In case you forgot, don't worry. Go to help formula sheet, click here and go to the formula sheet. And what you have to go is just go to the discount, go to 10%, and for the 5 years, this is the rate 0.621. Okay, 0.621. And I hope that you should be able to do it manually also, in case if one of you might not be able to open the table, but it should not be the case. You should know where your formulas are. Multiply by 0.621. When you enter 0, it will come as point. Okay, 0.621. Enter. If you see, it's coming as what? 71.333. Just wait a minute. Okay, this is 3 into 3793.791. Okay, three point 791. Okay, okay, so you have to add, remember, if you have taken a loan, interest also you have to pay. Interest you have to pay for 5 years. Okay, annual interest you have to pay, equal installments, equally you will pay interest. Okay, so interest is 3%, that's why you have taken 3 into, what is it? What is this 3.791? That is the annuity factor for 5 years. Again, go to help formula sheet, go to formula sheet, go to the annuity table, go to 10% and see for the 5 year. The annuity factor, it is 3.791. That's why you are you are adding it. Plus 3 into 3.791, the interest part. And then that is 82.70. So it will, and the nearest is this one, 82.71. Don't break your head to find 82.7 over here. Okay, 82.71 is the answer. Next, here. Okay, country X uses the dollar as its currency and country Y uses dinar. So country X expected inflation of 5%. The one who is using dollar is expecting inflation 5%, and compared to the one who is using dinar where the inflation is 2%. So countries Y nominal interest is 4% and the current spot exchange rate between the countries 1.5 dinar per $1. Okay. Now indicate by clicking on the relevant boxes which of the following statements are true or false according to their four-way equivalent model. Make sure you know what is this. If you don't know that, you will not be able to answer this. Simple. So when you're learning, when you're doing this practice test, how do you study? When you're not able to solve a question, stop there, go back to your textbook or revision kit or whatever it is, then study this and understand it. That shall make you remember more, because we always remember our mistakes. We never forget the mistakes which we do. If you don't make this mistake, have you have not made this mistake, you would have not learned. So don't treat the mistakes as you are not worth it, or you are coming at this stage and not able to solve the paper. Don't think like that. See, no one is perfect. We are not perfect. We will make mistakes. You have to go in the exam with that in your mind, that you will definitely make mistakes some way or the other, no matter how much you've studied. You can, okay, so don't strive 100%. Don't strive for that perfection. Make, I will tell you one thing. The more mistakes you do while you're practicing, the more better you will perform in the actual exam. That's how you learn. So you never ever think even for a second that the one who is, passing the exam has made everything correct, and when they're practicing, they do everything perfectly, everything is correct. No, it never happens. If it was, then all the people in the world will be getting hundreds, right? I don't think anyone till now got 100 in this paper. So country's X nominal interest should be 7.06 per year. X, they have already given the wise inflation and the interest, and they are saying this one. Before you click anything true or false, don't memorize answers. I will tell you another area where students go wrong. They try to memorize answers, especially section A and B answers. Don't ever do that, because sometimes the scenario might change what you have from what you have memorized. Maybe that answer is applicable for that one, but your answer might change. You know. So understand, here the inflation is low. Okay, interest. Okay, when your interest is low, definitely, sorry, when your inflation is low, definitely your interest will be low in that country. Higher the interest, higher the inflation. It goes. So if the interest is 2%, sorry, inflation is 2% and interest is 4% in country Y, countries X inflation is higher than country Y. So definitely the interest also will be higher than 4%. So this is true. Okay. Because they told X interest should be 7.06 according to this model, four-way equivalent model. Next, future expected spot rate after 1 year should be this 1.457 dinar per $1. The future. How will you know? How do you decide whether it's true or false? Hmm? It is simple. Just see the dollar. The dollar is having the higher inflation. Okay, whichever country is having a higher inflation, that country's currency will depreciate. Okay, so if you see the dollar, before $1 was 1.5 dinar, now $1 is 1.457. That means dollar depreciated, right? Dollar will depreciate because dollar is having the high inflation compared to country Y. It has to depreciate. That means it from 1.5 it will go down to 1.4571. So it's true. Countries X real interest should be higher than that of countries Y. Okay, you can even work out with some numbers and all in the scratch pad if you want to see. Country X. Okay, see countries A, if you X, if you see the interest is 7.06. It is higher than Y. Okay, so if your nominal interest is higher, your real interest also cannot be higher. You have to understand that somewhere you have to be lower. It has to be offset. If your nominal interest is higher, X's nominal interest is higher than Y, then your real interest should be lower. Okay, both cannot be high. Okay, both your real interest and nominal interest cannot be high compared to another country. So countries X, if you see the real interest, sorry, nominal interest is already higher than the Y's interest. So their real interest should be lower, not higher. That's why it's false. Which two of the following common actions would you lead to an increase in aggregate demand? Okay, this is the business, financial management environment. We studied chapter 2. Okay. Increase taxation and keep government expenditure the same? No, because if you increase tax, demand will reduce. Decrease taxation, increase government expenditure? Yes. Decreasing money supply, it has nothing to do with money supply when you are talking about in terms of demand. Decreasing the interest rates? Yes. When you decrease interest rates, money supply increases, so aggregate demand will increase. What is this one? Return on capital employed. You have to know the formula for return on capital employed. Okay. Return on capital employed, the formula is operating profit divided by debt plus equity. Open the calculator. So what is your operating profit? Operating profit is profit before interest and tax, which is 2,500. Okay. So 2,500 divided by debt plus equity. Okay. So equity and non-current liabilities, add both. If you add this, you don't have to see individual. Sometimes use your mind. Okay. Common sense also. See 10,000 plus 2,500. You don't have to individually add it here. We know it's 12,500. So just take 12,500, right? This is called wherever you can save time, save time. You don't have to individually add 10,000 plus 2,500. We know it. It's 12,500. Okay. Enter 0.2. So it's 20%. Next. Okay. Tramlane has 5 million of 0.5 nominal value ordinary shares in issue. It recently announced a 144 right issue of 6 per share. Its share price on the announcement of the right issue was 8 per share. What is the theoretical value of a right per existing share to 2 decimal places? Okay. How do you do that? How do you do that? You should know how to find the value of the right. Okay. So it is 5 million. 5 into. What is the right issue? The price? 8. Okay. Into 8. Okay. Press enter. Plus. You can do step by step or in one go if you are comfortable in doing it in one go, but I would do step by step. Into. I'll put bracket. Okay. 1.25. Okay. Into 6. Why 1.25? Because it is 5 divided by 4. 5 divided by 4. Because 1 for 4 right issue. So you have 5. So 5 divided by 4 is 1.25. Okay. Into 6. Okay. Close the bracket. Press enter. This divide by. Okay. Divide by. Put bracket. Okay. 6.25 minus 6. Minus 6. Divide by 4. No, wait. Something went wrong. Okay. Let me just do it manually first with my calculator. Okay, something just, so definitely it is 5 into 8 plus 1.25 into 6 because you are adding it, okay, the right ratio with this. Because the answer, let me tell you the answer, it is 0.4. But they told two decimal places. So even if it's 0.4, you have to write 0.40. Okay, this is the answer. But hold on. You have to know how you got this answer. Whenever some answer is there, don't memorize the answer. You have to be 100% convinced that this is how the correct answer is. Sometimes what happens, you might get this answer, but in some other way, which might be wrong. Right? The reason you have to learn it early is you have to learn the correct way. Even if you are getting the same answer by some other way, if the way is wrong, the right, you should not follow that way. Even if you are getting this answer, what matters is not getting this answer. What matters is you are using the right way to get this answer, because later on you'll be using the same method for some other, similar questions like this. So that should not be done. Okay, just give me a few minutes. I think, just wait a minute. Let us go to next. Okay, so this is the last question of section A. So I think I can spend some time here because this is the last, and we'll be checking the answers also. Okay. Because let me tell you what they have given. Okay, this is how they have written it. 5 into 8. Okay, this is in bracket plus 1.25, because 5 over 5, so I will just put 5 divided by 4, multiply by, I will just put multiply by 6. Issue as 6. Okay, close bracket, divide 6.25 minus 6 comma divide by 4. Okay, is equal to, sorry, equal to 0.4 per share. So this is how they are getting it. I think you're able to see it. Now you cannot zoom this out. So we understood how they got 5 into 8. We understood this part also. But the part which is bothering me is this. the calculation. I'm not able to do the calculation and get 0.4. Because if you add this separately, right, it will be 40, 5 into 8 plus 7.5, because 5 over 4 into 6, which is 47.5. After that, okay, okay, so this I will leave it to you so that you get it. But now what I'm going to do is I'm going to go to navigate and go to the last question, because I want to close this off. I want to exit the exam, okay, and see how the marks. So I'm going to end this exam here, exit. Now I'm going to go to marks and go to AFM and see self mark. Just see how much I've got. If you have C, I have got 30 out of 100. Right? All your multiple choice questions will be marked, right? That means all my questions are correct. You can check here and check here also how they have got. So this is how you will see. It will be marked. Right? And some of you might be wondering that if I get the perfect 30 marks for section A and the remaining for section B and few from section C, I will be able to pass. So that's why I don't have to practice enough for section C, which is a very wrong way of you going for the exam. Because imagine, how can you be so sure that you're getting all the marks in section A and B, right? Therefore, you have to do justice to all the sections. You have to attempt, you have to study also, right? So next all, okay, let's if you press the cross, you can see your results, okay? The FM passed exam, the practice test 2%, okay? If you see here in attempt 2, okay? So this bar, this graph will go up as soon as you perform better and better. You can see your progress over time in which attempt, okay? So that's it for section A practice test 1. My next video will be on section B questions on practice test 1 only. Make sure you watch that also, and also section C also. Till then, see you in my next video and take care.